focus on another underperforming sector, and that's been metals. That's been clearly losing sheen of late. Call it the impact of the Chinese economy on global metals, the best of the commodity upcycle. Is that behind us? A lot of questions in the investor's mind on the street as well on what's really ailing the sector right now. Rakesh Arora, founder at GoIndiaStocks.com, joins in on the show right now. We also have RK Goyal, the MD at Kalyani Steel, joining in on the show. Gentlemen, both of you, thank you so much for taking the time out and joining in. Rakesh, if I could start the discussion with you. I mean, the Chinese economy languishing, the impact on the global commodity market, do you think that's one of the key triggers which is weighing heavy on the metals market?
Yeah, definitely. China being 50% of, all global commodity trade, whatever happens in China has a big influence. So currently, there's a mixed feeling. At the one end, you have economy which is not doing that great. And at the other hand, there is expectation of stimulus. So we are into kind of a snooze zone at the moment. People are waiting and watching as to which way it will go. It will take quite a lot from the Chinese government to really propel demand for commodities. So they would need to come out with some fiscal stimulus, which they have hesitated till now. And monetary policy stimulus, which they've been giving, have been largely ineffective. So it's a wait and watch situation from a Chinese point of view.
If you take China out of the equation and throw in the upside which could come from India and the surprise which could come from Europe and let's say Europe and US, could that net impact be positive or it will be still neutral?
So, see, US and UK both are kind of, US is expected to get into recession and UK is kind of already there. So they are unlikely to move the needle as much. And India is only like 5-7% of global trade. So at the best, we can have some domestic demand and people can sell material. But prices are largely, driven by global, trade, etc. So Indian companies might not have too much of issue selling the volume, but pricing may not be that great.
Somebody who is looking at buying into metal stocks, should one avoid them? Because metal stocks have corrected. Every time the name China comes back, markets get excited. 5-7% move normally comes in. Do you think one should avoid falling into this trap of buying metals because China will come back?
So there's two trends which are, dominant here. One is that Indian, steel companies, etc., have strong balance sheet this time around. Going into down cycle less compared to previous down cycles where they were totally loaded into debt and had expanded capacities. This time it is not the case. So stocks are trading at a much reasonable valuation, or I would say a better valuation than they would otherwise in such a economic situation. Number two is that the smaller companies are getting re-rated because investors are waking up to the value proposition those companies had. So they all, which were trading at 3-4 times EBITDA, have been now pushed to 6-7 times. So these are the two, broader trades which are happening.
If I could get you in on the discussion, you think steel prices could rise from the current levels, or do you think macro challenges are going to continue to restrict upside, key amongst that being, what's happening with China? Mr. Goyal?
Hello?
Yes.
Can you repeat the question?
No, I just wanted to understand what your sense is on steel prices and whether the upside is going to be restricted with regards to what's happening within China.
Yeah, good morning. As far as whatever happening in China and the suits which are expected in view of the situation of Evergrande and other large infrastructure companies, there is a possibility China start dumping much larger volumes in India. So there will be a much larger pressure on the prices. So that is what is expected. But at the same time, India's story is very good and Indian local demand is good and it will increase. So by and large, situation for Indian companies may be stable. At the same time, there are better opportunities from Europe and USA, even though they may get into a sort of recessionary cycle, but then the local manufacturing there is very expensive. So So India is quite competitive, and India can export much larger volumes, not only in the form of steel, but then the products of steel, where there are no quota system or any such things.
Well, if you were to really paint a macro picture, would you say that the best of the commodity upcycle, which began in 2020, clearly is behind us?
It appears that way because the prices of all other commodity products and particularly steel ferroalloys have also started coming down.
Rakesh, let's switch from steel to specialized steel. Specialized steel is a space where, the China factor is not there. That is one space where you have the space program which is picking up. You've got the defense program which is picking up. Kalyani Steel, for example, is a steel company. They would be supplying steel to auto ancillary. Do you think this entire China correlation will only apply to HRCs and cold roll? It may not apply for specialized steel and other pockets?
Steel pricing is an add-on to the base steel price. So there will be an impact. There could be a delayed impact because, sometimes these guys have, longer term contracts, ranging up to, I think, 1 year contract. So the pricing could be having a differential or a deferred impact. But, nobody can escape if the base, steel prices are going down.
Our advice to our viewers, Rakesh Arora, is that one should not buy into metal stocks. Doesn't matter how cheap they are, doesn't matter how much they've fallen. The best of the cycle is behind us, and if you go against the cycle, then it's a problem for an investor.
So I would say that, you can be a little bit stock specific. There would be stock specific stories which will be available in the market. But as a theme, I don't envisage, big bull run into metal stocks. Even if you look at the last, 6 month returns, it's way below what market has given. So since market is going up, they will also, they'll be popping up rotation into, metal stocks which look value. But apart from that, I don't see a big bull run.
If I were to talk about, the fact that you're a provider of forging quality steel for a variety of automotive applications as well, help us understand, given that, demand is really booming within that sector of the economy, how can that sort of bridge the gap with the impact of, what's ongoing in China and the demand slump thereof?
Hello?
Yes, Mr. Goyal, go ahead.
Okay. Now, as far as the specialty steels and super specialty steels are concerned, it is not only the product, it is the service part also, where China finds it very difficult to compete with us. They can definitely export to India some large quantities where it is few hundred tons and all, but specialty steels are serviced in the form of even 5 kg to 500 tons. And that's where we do not hardly have any competition from China. So as far as our sectors are concerned, we have long-term contracts and long-term approvals. This is a business which is in relation to the approval part. Like any material which you want to supply to space, aerospace, energy sector, automobile sector, you need to have approvals which may take anything between 3 months to 5 years. So we do not see much of increased competition from China. And since the passenger car is doing very well, medium and heavy commercial vehicle production and demand is growing up, we feel that the situation is likely to be much better, and we will not face much of this cost pressure because already the prices have gone down. We have already corrected the price to our OEMs. And on the contrary, we see much larger export markets, particularly to Europe and USA. So I strongly believe that the specialty and super specialty products, particularly for forging industry and component industry, will do well.
Mr. Goyal, Rakesh, both of you, thank you so much for taking the time out and helping us understand what really is happening within the metals market and how the dynamics for steel are playing out globally as well. Okay, from